What up traders, what up investors, Ken here from Dyslexic Investor, and we got another fantastic live stream today. We're going to be doing something slightly different again. As everyone's joining, we got Ryan, we got Makeshift, thank you for coming out, we got Roberts, thank you guys so much for coming out. We're going to be going through just the very basics of what you see a lot of the times in my charts with a lot of the different moving averages and then some of the different other indicators below the charts with that are some usually tied to volume and relative strength. That being said, if you're interested on looking at the charts and you have ThinkorSwim or TOS available, I'll be putting it in the live chat. If so, it should be towards the top. It's called the TOS Setup Basic, and it's also linked there. It looks like a little a little mini link there. If that's already said and done, we can go ahead and get this boat rolling. Let me just paste it here one more time. There, if you need it. Let me go ahead and get this away here. And boop. There you go. Now you should be able to see my screen. So basically what we're going to be doing is, again, this is going to be I want to say the most basic, but this is going to be what I normally look at a daily side of the chart. I normally don't do much intraday stuff. I use slightly different schematics or different charts in that sense, but this is going to be strictly looking at a daily or like a weekly side of things. Because normally if someone pulls up a stock or asks for a stock, I always go to the daily to kind of give me that on what's kind of going on scenario. So that being said, again, we're going to be looking at SPY, which is the Standard & Poor's 500 ETF here. As you can see, it's, again, with the overall downturn we had and kind of I wouldn't say a V-shaped recovery, kind of a sloppy V on the way up. So again, I posted that link in the chat if you want to check it out. And so we can kind of just do a quick walkthrough of what we're looking at here for the different setups. So within ThinkorSwim, if you haven't used it very much, it can be a lot of different tools and bells and whistles on it that can do the same thing. You can hit different various things and it takes you to the exact same place and so forth. So for this particular chart, we're going to be looking at the bread and butter of what we go by is a lot of the exponential moving averages over the simple moving averages. Each of them are, of course, different colors, different lined, or if they're dashed or whatsoever. That being said, we're going to have the 5, 8, 21, 34, and 200. Those are going to be all the exponential moving averages. And then we're going to have the 50 simple moving average. And the reason why I throw the simple moving average in there, so the 50-day is normally something that a lot of other, I wouldn't say old school techs, but a lot of people who are more novice with a lot of technical analysis, they normally use like a 10, a 50, and a 200, and maybe they'll throw in like a 100 day simple moving average in there, because that's usually the default for a lot of people what they go to. It's a lot of the literature and the books that you might read in the beginning. We'll be talking a lot about the simple moving average rather than the exponential, the close of. And another key point is we always look for the close of each of the moving averages. We're not looking for the mid, we're not looking for the open or the high or the low of the day. We're looking for the close of the day, especially if you're looking at a daily side of the chart. Then the other one that we talk a lot about is the parabolic SAR, and those are those little purple dots we talk about. That kind of helps me dictate a potential trend switch and a potential of strength in a stock. And then on the very lower part of the chart, we're going to have the TTM squeeze, which will go into more detail, and then we're going to have the RSI, which will go in more detail. And then the third part is usually, I kind of switch it out between like a MACD or the volume zone oscillator. I kind of switch it back and forth depending on how I feel that day. Normally, I'll have multiple different charts to look at, but if I just had strictly one to look at and I had to make a trade off of it, I would most likely use the volume zone oscillator. I would add the MACD on here, but sometimes it gets the screen a little bit too crowded, and I really just really rely on a lot of the moving averages instead than anything else. So that is the basic overview of that. And of course, if you ever played around with all these different ticker or studies or different various things, it can go pretty in depth. I have some custom ones on here that I actually purchased and things like that, but you can have a whole smorgasbord of fun on going through those and finding what really works for you. And TOS has a really great resource library as well to kind of give you like an overview and things like that. Have you tried the Chinese Webull? Is that like a Robinhood, Ryan? I have not. I use ThinkorSwim or TD Ameritrade for investing, and majority of my trading comes actually from Tastyworks. Love those guys, Tastyworks. So that's basically the overview of what we're going to be looking at. Then we're going to be looking at the chart itself and dive into what each indicator I want to kind of come out of. So another key point is to make sure that not one single indicator can give me a trading idea. It has to be a 3-4 strong indications of a uptrend, a downtrend, or just trading sideways kind of significantly. You use Webull, Roberts? Do you like it? Is it pretty good? YouTube keeps on recommending it. You mean Webull keeps on paying YouTube to recommend it to you? Is it also free commissions? If it's because the funny thing is, I literally just got. I don't use Robinhood. I used it way in the past when it first came out to play around with it, because again, it was free trading, and that was very unlikely. Then even within ThinkorSwim, it was like $5 one way. It gives you 2 free stocks if you sign up. Oh, yeah, maybe. I don't know. I don't really. Free stock is nice, but it's not great for trading. If you're like holding like an IRA account or something that you're really just not trading that much, and you're just doing things like that. Because again, in the past, like when ThinkorSwim was pretty, like, I wouldn't say premium, but it was still somewhat independent. It was like $7 a trade, and when your account is only like $1,000 to $2,000, that's a huge commission to be taken out of it. That's where I would switch to. Back in the day, it was called Option House, which actually was purchased by E-Trade, I believe. And they had the lowest commission trades on options and on stock. Yeah, TOS has a good web app that I've been playing around with. It's not as great, but we'll see. I don't use it very much. I literally just use my desktop, and if I'm anything mobile, I'll just use Tastyworks. But the Tastyworks doesn't have the world's greatest charting at all. They actually don't really care about charting. Schwab is a boomer platform. I have never actually used that, so I have no idea. Alright, so let's go ahead and jump into the moving averages here then. Okay, so again, the lower the moving averages, what it takes the average of. So it takes the 5 as going to be the 5 exponential moving average of the close for the past 5 days on their average, and it basically between the 5 and 8 exponential moving average are considered the very fast and high momentum indications of a stock movement or trend. So in particular, you can kind of see here a couple weeks ago, the S&P 500 was trading well above the 8 and then really trading really close to the 5. So that meaning that it had a potential continuous uptrend until it kind of broke it. And of course, usually when that break happens, especially on the 5 and 8, it's usually pretty severe initially. As you can see here with this gap down, that was fairly strong in the overall market. Then these are normally trading, if you're trading something within a week or less, but you're trading it very aggressively, I would say. Very aggressively to the long or short side, again, depending on what we're looking at. It's just a great representation of it being a upward trend here. on this particular chart. But again, this is going to be very aggressive if you're trading around these moving averages, and it's going to be a much shorter time frame for sure. Of course, you can kind of see here the bread and butter that I always live by and always go to is the 21 exponential moving average. It's the yellow line. I have it on the double thick mode as well, so it's a little bit fatter to kind of identify. I have that on the width of 3 to kind of let me know that's my bread and butter right there. That being said, that's going to be basically my medium, my reversion to the mean strategy, whatever you want to call it. It's kind of on the daily chart and any other chart. It usually will always kind of come back to trade in around that range. So that being said, you can also kind of consider that also on the 34. Those are basically the two main averages that I always rely on is the 21 and the 34. Both kind of come into key plays with uptrends and so forth. Again, the only difference is the duration of these moving averages, depending if I'm trading something longer term. By longer term, I mean 6 months to a year plus. I most likely would be switching to a 3-year weekly chart to kind of give me a better perspective on the overall what I'm doing. But most of my trading is done within swing trades of a couple months to 30 to 45 days, that being said. So again, those are going to be those moving averages. And of course, we're going to have the 50-day simple moving average, which is the red dotted line here below here. So this is one where I just kind of it's kind of like my mindful one where I'm looking at what other people might be doing. They kind of give me the overall guide of, I always do call it the value investor. So between the 50 and the 200 simple moving average is usually which a lot of investors kind of rely on a potential upward or downward trend. That being said, you can kind of see here that it's basically going to cross probably most likely the 200 exponential moving average, which is normally a great sign for a potential upward movement. I'm not going to be completely reliable on it, but there is no other indication where we could be crashing down. Again, anything can happen. We don't have a crystal ball here. Not a single indicator or anything will tell me what the future is. It's just putting a probability into place for, again, to be successful in trading or investing. You only have to be right like 55 to 60% of the time. The thing is you have to just cut your losses really fast and be mindful once you enter. And we'll talk to some of that psychology as well. Because the 50-day and the 200-day are very psychologically driven numbers on top of some of the Fibonacci numbers we'll be talking about as well. Of course, and then last but not least is the 200-day exponential moving average. Of course, this is going to be the one that is basically the much longer term and usually a very strong sign of upward resistance or downward support. You kind of saw that here the last beginning of the week, kind of coming down near the 200-day, but it kind of came in to kind of show you the right proper strength to kind of hold the overall market up. So hopefully this all made sense on those moving averages. Any have any questions on the moving averages and things like that, or do I need to post the link back into the chat window as well? If I saw a couple more people join, I appreciate that. Looks like a couple questions came in. Do you use margin? How is the leverage for above 25K in TOS similar to other platforms? I don't actually. I have margin available, but I normally don't use it. Yeah, I do. So this is the more basic one. Robert's great question. I do use the 89, and I also throw in the 55 as well for the daily side of things. But I found that it was a little bit too crowded for me. I've been playing around with it, potentially adding the 89 back in to kind of give me the 89 would be more for trades that I'm really looking for a potential longer trend. And normally if it starts breaking below the 34 exponential moving average, I'm usually looking to go short unless the 50-day or anything has it kind of come in for support there. Great question though. What about VWAP? VWAP is more for intraday there, Ryan, trading. I kind of just really chose the volume of in a very short-term time period. You can add it onto the chart, but it wouldn't. I haven't found any significant difference on a daily side. If you're looking at a 5 or a 15-minute chart, then it could kind of come into some play. But I don't have. I don't really have used it now. Can I get the link later? I'm on mobile. Makeshift. Yeah, I can. I'm gonna put it in the notes as well when this video gets things. I'll put it in the not the notes, the description box, if that makes sense. If that helps. I just wanted to see if people wanted to listen and follow along to kind of see what we're doing here. Of course, and then we can kind of continue going here. I use there's different ways in TOS to kind of show the volume. I have the volume volume on the below here. I don't add it as one of the lower panels. I kind of have in the background to kind of significantly show me things like that. On other charts, I actually I add in the average volume over like a 20-day period to kind of see of an influx of volume, and that's usually only for a particular strategy for a very high momentum play. For example, that's like an NAT where you see volume that is like 30-50 times the normal range. That's going to be called like your FOMO kind of trading strategy, where there's just so many people diving in because they want to make that quick buck. We can kind of look at that as well to kind of show you that FOMO mentality of literally coming in here. You see this huge middle finger right here. You got the knuckle here, you got the middle finger here and there. It's just basically saying F you. You guys are going to go get screwed. And it kind of comes down. That's basically the way I look at the FOMO mentality of that. You can kind of see here, even with the RSI kind of showing oversold on top of the volume oscillator basically printing to a super high rating of nearly 100. You have again RSI way up here as well, on top of the tickers are way away from the 5 and 8 exponential moving average, just indicating extreme overbought scenario. But again, this could last for a week, 2 weeks at a time. You can look at that easily on something like I think it was like was it Tilray? Oh shoot, what was it? What is that pot stock called? Is it this one? No, I gotta look that pot stock up. Tilray stock. Is it like T something? TL? Oh, it's TL. TLR1. So this one, it doesn't do it justice. We have to go to a weekly, but you can kind of see here, kind of had that same middle finger kind of pattern, peaking out around this level and going from 300 now down to like $8. So just be mindful of that. Those FOMO trades are always very skeptical. It's kind of, I'm not saying Nicola's in that same boat, but there's some questionable things, especially about Nicola. Thanks guys for posting that. So that's basically what I would use that for. But now kind of going back to the overall downward indicators. So we kind of have so a lot of people ask me where I learned trading. So I learned a lot of trading from initially, I probably have joined in my running trading. Again, I'm 32 years old and I've been doing this for at least solidly for 7 years, but I've been trading on and off and investing since I've been probably 17, 18 years old. Because I remember calling my first time calling in on a phone to a broker to initiate buying Apple. So that was my I actually sold that Apple position the second time it went split. It was fantastic, wonderful, very awesome stuff there. What kind of keyboard sounds like a cherry blue keys? What kind of keyboard do I use? It's just a really nice Logitech mechanical keyboard. I like the clicky click, keeps me awake. I don't like silent keyboards, it's too loud. Alright, so before I forget, okay, I get sidetracked, I'm sorry. The TTM squeeze is basically a indicator that I learned from a person from a YouTube channel, and then later attended a couple of his classes, is a John Carter or someone at Simpler Trading, where they were looking at this particular TTM squeeze combines two different indicators. It uses the Bollinger Bands and the Keltner channels. And that basically just measures how far in between they are. Kelly D, yes, we are doing stocks. We're just going to be doing this for maybe 5 or 10 more minutes to do a quick overview, and then we'll jump into some stocks. So what they measure is the Keltner and Bollinger Bands. Once the little dots turn red, that means that the Bollinger Bands are inside the Bollinger Bands and the Keltner channels are contracting, and they're very tightly wound, almost like a rubber band, indicating a potential pop off, potential going higher or lower. Again, this indication can potentially tell you where it could be going. Again, if it's in a squeeze, they call it, when it's red dots and it's showing like these red below. Let me try to find a particular moment in time. You can kind of see there's a squeeze here, so the momentum switches from lower to higher, so that was a probability of it going higher. So on top of looking at the moving averages and other various things, you kind of see here that it could have gone sideways, because again, this was like a kangaroo market here as well, but the RSI wasn't really printing lower. You just saw the 5 and 8 exponential moving averages start crossing over, which is a positive sign. Of course, with that momentum, really popped off and took the stock substantially higher. Mark, this is called the TTM squeeze by John Carter. How many years did it take me profitable? It took me a lot. Honestly, I need to make a video on just about my journey, but it's gonna be a painful one. I think it was just what changed my overall trading was my hard-headedness and my emotions. It was I had all the tools and all the various things. I just didn't follow them. I was just being emotional about it. I thought I was smarter. I threw money away where I shouldn't have. I should have got out when I didn't. I had to stop, but I canceled it because I thought I knew better. But of course, then the stop kept on running lower, and I lost money. Then I doubled down on that stock, adding in another 1,000 shares or whatever at the time to make up for it. I revenge trade, all those other words that you see, and things like that. And then the second to last one is the RSI. Everyone kind of knows what this is. This is the RSI, stands for Relative Strength Index. And this is basically, it generically comes with, it's a 14 period moving, and then it comes usually 70-30. I changed mine to 80-20. That it's basically where it comes down to, it gives me a better indication of what really is oversold or overbought. The only problem with a lot of people run into is that it's relatively strength to what's going on in the market. So for example, this downturn we had with the overall pandemic, this whole cut down from like 340 to like 290 was extremely steep. We're talking, what was like, that was like 15%, okay? 15% in like a week. That's insane. That, of course, triggered the overall movement down and completely showing oversold. But that, again, you cannot rely on one single indication. I'm sure a lot of people saw this and said, oh, that's the bottom, let me buy. but it was so steep and so fast, you kind of got a dead cat bounce. You kind of didn't see anything kind of recover. None of the ticks came back to the 21. Everything started pointing still further to the south. You kind of saw the 5 and 8 kind of trading somewhat sideways, but you still saw multiple other indications of lower lows, of the momentum on the TTM squeeze going lower. You saw the volume oscillator going substantially lower, not really picking up substantially, going at least back to the 0 line or the yellow line there. So that's going to be the introduction to the next one, which is the volume zone oscillator. So this is a one that I kind of switch in and out of between the MACD. So this is basically taking a relative volume to exponential moving average levels with trading volume, to help to detect a potential trend change in the strength of that trend. Because you can kind of see it kind of coincides with the RSI, meaning that if it's kind of a dead cat bounce, depending on where it lies in that overall market. Again, depending on how you want to look at it, I normally just kind of look at it really quickly in the sense of, is it negative, and at what line is it negative? Is it negative 40 or negative 60? The yellow line is 0, of course. Then you have plus 40 and then plus 60 above. So normally if it's on either or of those extremes, that's going to be when I'm looking at. Again, with this overall downturn that we've had, it's kind of be a hard indication in that. So for example, we had this downturn just recently within the market, that you can kind of see this overall downtrend here. Again, it did hold somewhat the 34 and the 200, and we also saw a potential bounce here within the kind of right around the 0 level, again with the RSI kind of holding there as well. We did see a momentum loss there as well, but again, you can't rely on one particular indication. We needed to do a combination of multiple indications to identify that the 34 and the 200 really came in for strong support, and they were previously support as well, and normally those are the psychological levels of that. So that's basically the overall look at this particular this charting setup. Again, this is going to be very much what I kind of use for a bread and butter. Jason, do you use EMA or SMA? So all the moving averages are. Do you using ThinkorSwim right now? I'm gonna put the. I'm gonna paste the chart setup. There we go. So yeah. So what I use here, Jason, again, it's going to be mostly everything exponential. I do throw in the 50-day just to kind of be looking for the moving average of what other folks are doing. And I kind of, again, this is not the only single chart that I look at. This is just my initial go-to of what I do. Jason, I mean, which EMA and SMAs do you use? Yeah, so again, I use the 5, 8, 21, 34, and 200 exponential, and then the 50-day simple moving average. But again, I sometimes add the 89 and 55 exponential moving average for when I'm doing longer term trades, or when I'm really trying to fine tune a particular entry or some resistance level. I really want to get into a particular stock or so forth. Because again, this is just a very quick overview of what I'm looking at, and then I could dive into the other 7-8 different charts that I use to kind of figure out what strategy I'm going to be looking at as well. Again, when I scan through a chart, I can kind of just go through it. I'm usually looking if there's a squeeze. I'm looking at if the moving averages are nicely stacked, if it's the 5, 8, 21, 34, 50, and the 200, usually a good indication, or if the RSI or volume oscillators are on extreme levels, and so forth. Really, the 34? Yeah, I use the 34. So the thing is a lot of those numbers are Fibonacci retracements numbers. So those are the ones that kind of come to there. So again, you have to look at it. I want to be ahead of the trend. I don't want to say ahead of the trend. I don't want to be doing what everyone else is doing. We wanted to kind of analyze on something that has more technical analysis spin to it, because everyone is using the 10, the 50, and 200 and the 100 simple moving averages. And sometimes I have that chart on the side to kind of see where potential levels could be happening. Yeah, the RSI is a trap. I do believe that, Ryan, but you have to be, for me, it works very well on the sense of knowing on what it's showing you. Again, it's not the only indicator that you should follow and go for. It's going to be tied to other various things. Yeah, so Fibonacci retracements is basically, so in ThinkorSwim they make it really simple. You just right click on the particular high. So I can use the one I usually go to. There's other different ones. You can do time ratios. You can do different extensions. This is when I do really in-depth charting and things like that, which I kind of want to incorporate to more of my videos. But I think people get kind of bored of it, and it's just maybe too technical. I don't know. Because I can talk about this, so forth. The Chaikin oscillator and RSI. Yeah, I used to use Chaikin oscillator, the Chaikin money flow. Is that the one you're talking about? So before I forget, is the swing high to swing low. So the Fibonacci retracement goes into the late great mathematic guy back in ancient Greece, I believe, used Fibonacci retracements, and he saw these numbers and patterns reoccur within different forms in nature and things like that. So these are the numbers that have been also come into the stock market. So that being said, again, this is not a science, it's more of an art form, if that makes sense. So that is basically coming into the very key levels within the Fibonacci retracements that I use is the 618% and 78.6 and then the 127. So normally how you would use this is potentially the example of the S&P 500. If you had the swing high to swing low, it's been trading up. It kind of broke above its 50-day. You can kind of see the 50-day kind of came in as support here multiple times. Now it kind of had a couple areas of resistance on the 618 on the way up, failed here, failed there, failed there. Finally had enough momentum to gap through it, then kind of traded sideways and along with the 200-day exponential moving average, kind of grinded up, kind of got stopped out just slightly around the 78.6. Of course, gapped up again, kind of failed that, went back down, now trading below the 34 and 200-day, and now kind of having some resistance again around the 78.6 for a potential gap up. Because again, with the parabolic SAR still above it, we want this to kind of switch below it once some momentum comes in. We do see the volume oscillator showing some indications of volume coming in. Again, RSI has been flat. We just want the TTM squeeze to show some particular momentum to continue going higher. Again, with the 5 and 8 start to print higher with curling up. Makeshift flavor, do you use Elliott wave theory? No, because that is, I have tried to learn that. I have read books on it. ThinkorSwim doesn't do the greatest job on trying to use that within the Elliott wave charting way. Makes sense. I was wondering why the 34 makes sense. Do you use thanks? Appreciate it, guys. Don't forget to hit the button. Thank you, Makeshift. I use the Chake to watch Interstellar money flow, right? That's correct. Yeah, Roberts. That's the one that it does that. There's usually a really strong indication on, again, as a retail trader or investor, you have a lot of advantages that huge hedge funds can't do, which is basically be able to get in and out of position with a snap of a finger. with these huge pensions and hedge funds, that it takes weeks to build in to multiple positions. Again, you're talking about just getting into a blue chip company like an AMD would take them 2 to 3 weeks to build a reasonable size position and a well over $1 billion to $5 billion stock portfolio to make a difference. For us, we can just get in and out within a flick of a finger if something goes wrong. All right, so if anyone has any more questions, we can go ahead and jump to some charts if you guys want to. Are you a full-time trader, or you just do it for fun? Aaron, I'm not a full-time. Well, I guess I am a full-time trader. I still do have a day job. I still have a day job. Yes, I do. Luckily, my day job is mostly remote as well, because I do sysadmin or system administrative stuff on servers and things like that, so I can kind of do that from anywhere. And trading has just kind of been basically a second way of income. Most of it is just trading in my IRA account, but then I have my options accounts where I kind of just use them as like a little side hustle there. Alright, so it looks like we've got a lot of questions are coming in. Thanks, guys. Could you explain time and sales, please? Time and sales is something that is basically, you're talking about in the options market. This is something I really don't follow. I just look at some really big swings in the time and sales when someone purchased something, and usually an indication of, again, you just don't know the proper intent behind the person that's buying that large position. So if you go to the time and sale tab, it can be a multiple different reason why this person is buying it. So like, for example, this position right here, literally at 16, there's about 6,000. Oh my God, that's a lot. That's a pretty substantial position. So this person is betting on a very big market uptick potentially. Again, this is from the exchange of the Chicago Board of Equities, or Exchange Boards of Exchange or something, and they're buying a very, holy moly, someone just bought, okay, I didn't even see some of these trades. So someone this morning bought a 10,000 quantities for $350 in November on call. So that's a pretty sizable position there. So definitely might have to do a video on that one, boys. That's quite interesting as well. Making a really looking for that. Do I mess with Citrix? Citrix, like the GoToMeeting stuff? I think they're own the same company. I deal with a lot of Cisco, AWS, and Azure. What do you guys think about CC? Okay, I think I got everyone. Let's see here. If I miss any questions, I do apologize. Just looking for. I'm just scanning through, making sure I don't skip things. Oh, sorry. Shikrika says, do you use the 4-hour chart more or a 1 minute to determine when you get into a trade? If I'm doing I rarely ever look at a 1 minute chart. It's just too much chaos for me, and my brain can't compute that. When I get into a trade, it's usually on a daily chart, honestly. Daily chart, or even if I'm swing trading it, it's going to always kind of come back to a daily chart. Okay, I think we got. I really appreciate everyone for coming out. If you guys want to hang around for looking at some potential charts, we can do that. We can definitely look at some overall trades and things like that. We'll have some cool discussions about that if you guys are interested. If not, we can just call it a night, and we can just see you guys in the morning. See you guys tomorrow. Let's see what you guys want to do. Thank you, Makeshift. I appreciate that. I don't use level 2 Makeshift. It's just that's more for looking for potential flow and trend change within day trading. So for day trading, it's something I don't rarely do because my emotions are, I've learned in the past, is not the greatest. And plus with the job that I have, I can't stay in front of the screen. I do have multiple indications you can usually see on here. I can set stops and everything. But with day trades, it's usually, for me, a coin flip. So it's hard for me to look at it. For day trading and scalping, if you have the patience and the complete lack of emotions tied to day trading, go for it. I just would recommend, for me personally, what helped me was swing trading. It's something that I could create basically a base and ability to kind of build upon and so forth. JT. So JT, I looked at the 30K units here. It was the 10,861 calls that someone purchased at the COB, literally 10 minutes after the market opened today. Again, someone. The thing is this person, you can't tell if this person went long or short on this. You're just kind of making the prediction. This looks like someone is purchasing or selling these, honestly. December 30th 250s for $10.20 for a large hedge. So a lot of people use the S&P 500 to hedge things. Roberts, thank you, man. Appreciate the donation. I really do. Okay, it looks like everyone is pretty cool to do some looking at some stocks here. It looks like a couple tickets are already coming in. We can take a look at a little quickie-loo. Again, I will share this link in the chat here really one more time. Boom. So that is the looking at that. I just posted that for sure. Let me go ahead and switch to what I currently use. Boom. Because again, I have a more complex grid format here with the arrows up here. All right, so let's look at some stocks, boys. Okay, looks like let's start with Ryan. He said TWO. I think I looked at this one when you posted it before the stream started. It looks like I can see the bid and ask is pretty high after hours. It's up like nearly 30-40 cents. Again, this looks like some kind of investment corp. I don't know what they do. It has a dividend coming out soon. The only concern is that it's pretty tightly wound here, and it's really just kind of trading sideways. Again, we'll have to see on how it closes out for the week, depending how long you're holding this. The 34, which is around, I guess that would be like $4.80, has kind of been support more than the 21 in the last couple weeks. The only thing is we want to kind of see that parabolic SAR switch to the bottom, and the volume oscillator down here. We kind of want to make sure that this doesn't go negative. It can stay negative for a little bit, but if it cuts in really sharp and goes down to the first red line, that could be an indication of more pain to come. I don't know how to pronounce your last name. CCL trade, please. Sure. I don't even know how they closed today. Nothing too crazy. So again, with this one, we kind of been covering the cruise lines quite a bit within the some of the live streams, but some of the videos we've been doing. The 21 has been holding pretty much fairly strong. It has not closed below it, only this one day, but the overall trend is still kind of just trading sideways, even though their earnings wasn't that great. Looks like they lost quite a bit today. I think they reported it after the close, correct? So it looks it's actually up after hours, so it's at 1940. Again, we're really looking for that 21 exponential moving average to continue to hold, and we want to see that momentum switch. Again, the volume oscillators has kind of gone negative, but again, with the kind of the earnings out of the way, the print could be going positive more, and we kind of need the 5 and 8 start curling up there. Kelly D with Coca-Cola, CCL, and Etsy. And what happened with K? Yeah, talk to me about KR, man. I got sideswiped on that one. I had to roll that. It was not good. I was looking at. I had an alert that pinged me around like $31, and I got it during a meeting today. I said, "What in the flip flop is going on with KR?" I think this kind of lost favor, honestly. You kind of see here, it was really trading sideways. I was looking for a potential move higher to at least 34 plus dollars. It kind of failed there, and now it's kind of just trading lower with even earnings potentially looking to go to the 200-day if the overall consistency cannot stay higher. I'm thinking it can just kind of just trade sideways between like the 31 to 32 level until we kind of get another kick higher. We can do Etsy for you. ETSY. Yeah, so Etsy, as you can see here, the first thing I look at is the squeeze. It did fire high, so that means the momentum is kicking off to go higher, potentially trying to bust above that $88 tomorrow. If, again, with the overall market continues going higher, we do see that there is some room to run, even though with the RSI and the volume oscillator, there isn't the significant amount of volume potentially coming in yet. Just being mindful that we could see some really strong overhead resistance here on this particular one, because what is happening here, whatever happened here, these individuals who didn't get out in time could be getting out on once it gets up to that $88 level. They could just have an automatic get out of a dodge kind of scenario. And then KO, let's Coca-Cola, I believe. So KO is just kind of been trading sideways. Let me do a fib on this one here for you. Yeah, so it hasn't really broken above the 50-day. I mean, the 50 percentile move. It kind of failed there, really failed at the 200-day. So we're looking at basically some overhead resistance between 50 and 51. Again, with the parabolic SR kind of switching lower, it looks like it just wants to trade sideways, using the 34 for some holding pattern. Nothing too really to report on anything significantly printing down. It's just kind of a very stagnant stock in that sense. Aaron, can you look at CC? We did that, and AAL all the time. You mind looking at LUV? Yes, I love Southwest. They're one of my favorite airlines to fly. They just keep it real. So most of the airlines, the way if you look at the stock itself, not the price, really has the same kind of pattern. With Love here, again, we see that 50% retracement kind of failed here, kind of failed there. Again, well below its 200-day exponential moving average, but the 618 and 200-day exponential moving average are kind of on the same level, so around the 43 to 44 level. Potentially is some really strong overhead resistance, even though with that 50% 40 to 41 level as some overhead resistance. That being said, for the downward support, that 21 has been holding fairly well. Not to the T, because you kind of see that the ticks kind of going through that with the wick. But that being said, the 21 has been showing some kind of strength there. We do see the 34 start coming in through the 50-day, which is great as well. But again, we need that parabolic SAR to switch. We kind of need this momentum squeeze to start turning the lighter teal to kind of print higher, and this volume oscillator down below here as well to kind of bounce off the 0 to kind of get to the above the white line, so above 20 to potentially the 40 plus on the volume oscillator as well. The RSI could be flat and then kind of curl up as well to kind of give us that another kick higher. Oh, my darn Slack thing just went all the thing. Ryan, I used to fly on 150 flights a year. Spirit is a terrible airline. Delta is the best. I believe Delta is a great overall company for sure. I love. GIL. I don't even know what this is. Activewear. I don't even know what this is. This looks something terrible here, and of course, something that's the pandemic happened there. I don't know, man. I don't even know what this company does. I'm gonna take a quick drink of water while I think about this. It just looks like it's trading sideways, but it has not performed well even to the other stocks because it's well below its 200-day. I can't even, if I did the fib from the swing high to swing low, it looks like it's not even near its first, it's not even near its 38 percentile move, nowhere near its 50 percentile move. It's just kind of an overall downbeaten trend stock. If I look here on the weekly side, it's just kind of been beaten down pretty bad on some very bad news, even before the pandemic. So I really wouldn't want to touch that. JT is PayPal. Yeah, we can look at PayPal, and then Mark will look at Beyond Meat. PYPL. So we own this for our IRA account, or my long-term investment account. This has been fantastic. The only thing I'm slightly going to get concerned about is that the RSI could be potentially start printing red if we continue seeing some strength. Again, after hours trading was around 170. Again, after hours trading is the wild, wild west. That being said, we are looking at brand new uncharted territory, so be mindful of that. We do have this large gap up on earnings, but you can kind of see here the 21 has been very well performing and very kind to PayPal on the upward trend. Looking for, again, really trading really aggressively between the 5 and 8 exponential moving averages. The parabolic SAR is still well below. Potentially, if you're not in it, you have to kind of wait till it gets to the 21, or potentially the 34. Something really has to go bad to kind of get it back to 150. That being said, this is really a forward-thinking company, and they really love moving this one, without a doubt. This is a great stock if you're in it. BYND, Beyond Meat. So this is one that is in my wife's portfolio. Look at this here. This looks interesting. Yeah, I was going to say it's going to line up exactly with the 618 because I kind of can just tell over time. It has failed here multiple times, so it's at 166.55. We really need a break above this limit to kind of break any higher. But again, with a lot of other stocks that we're looking at, the 21 has been performing very well for this. Kind of a little more choppier than PayPal we just looked at, but this is just more signs of being able to get in at these different various levels. Again, if you believe in the overall trend of people switching from meat and then using this very product, it's basically, we'll see. I like this trend long term. Even here with the, we can look at the weekly side. Again, that really overhead resistance around 166, but once we get past that, things look fairly strong for this company. We do see the volume, the zone down here getting very well positive, so really strong trend, really pushing higher. We just kind of need to see some more, the RSI start printing higher. But again, these moving averages are so nicely stacked on Beyond Meat. We got the 5, 8, 21, 34, 50, and 200. You really can't ask for much thing better than that. That's a beautiful looking chart. Let's see here. Play-Doh, you're welcome for sharing the knowledge. NVDA. I can talk about stocks all day, my friends. So, that being said, again, this really is a very simplistic way of trading in the sense of, I believe, is you kind of have to keep it simplistic. If you get it too intense, it's just you're going to forget rules and you're going to manipulate them and things like that. But that 21 has been holding fairly well with this overall trend. The issue is, the thing is too, is also it's in a squeeze. And it's in very unknown charted territory because it's near its all-time highs, which is 380. Potentially, what this is signaling as of today, this evening, a potential pop-off to try to break above the 180 level as of right now. We'll have to see on what this squeeze kind of plays out and seeing how the volume zone oscillator kind of plays out here as well. But again, you have the moving averages to 5, 8, 21, 34, and 50, and 200 very nicely stacked. And the only concern is if the RSI prints really fast higher, that could signal a quick little short sale. I mean, a overbought sign. But again, be mindful, not just one indicator can dictate that. It takes multiple indications and to make that conclusion of that. David J., can I ask you how you feel about earnings coming up for the big tech companies? So David J., I honestly don't trade earnings. I usually get out of my short-term trading positions on earnings because, again, I believe earnings are a coin flip. You can have the best numbers in the world, but if the CEO or someone says something inappropriate or makes up some kind of excuse that the street doesn't like or Wall Street doesn't like, you can completely get destroyed in that. I do not buy calls or puts. I only buy stock. I have shares in Norwegian Cruise Lines, Carnival, Love, and IVR for a day trade account. If you are new, a trade should not be than 15% of your portfolio, in my opinion. If you're I would actually do it smaller, Aaron. A trade wouldn't be any more or less than 5 to 3% of your portfolio, and out of that 5 or 3% of the portfolio, you should only potentially, let's say, make it really nice round numbers. If it's the 10% of your account, let's say it's call it $1,000, you should only wager a potential stop loss on that, maybe to like 10% of that, to be very mindful of that, so forth. Makeshift, what is Twilio? So Twilio is what is Twilio? So we use them, the TWLO, yeah. Whew, wow, I didn't know this thing is, wow, this is a gorgeous looking stock right now. With the squeeze in play, RSI is extremely high, volume oscillators looking to take substantially higher, looking for a potential break into all-time highs. Again, this looks a really strong company. I would, if you're in it, I would, depending on what your trading scenario is to get some off the table if you're making some profit. But this looks like it could potentially go higher to all-time territory. I wouldn't be able to get into the stock as of right now. It's just really performing well now. Duke GAN, thanks. Whoa, what is this one? This was like a penny stock and then it just blew up. Is this like a pharmaceutical company or something? Yeah, this is kind of like the FOMO mentality we were kind of talking about. Again, I'm not sure what this company does. It looks like it has some really strength behind it, and it has some more investment behind it because, again, it's fairly strong and it's really has fast momentum and it's aggressive. It's come down to 21 now, kind of made a bounce. It wasn't a dead cat bounce because it hasn't failed and started going over. It's getting near its $26 level. Just be very mindful of this. This is, again, looks like a lot of volume kind of came into here. This potentially support initially around the $20 level on the way down. Again, with the parabolic SAR just switching, and everything is somewhat nicely stacked here. Just a play I wouldn't personally play because I just don't know anything about it, and I just don't know. This is just a little too aggressive for me because, again, something can just switch on this on a dime and just go the other way. YOLO spy calls. Let's see. Oh shoot, my thing just slid down again. Oh my gosh, we got a lot of people in here today. Thank you guys, everyone, for coming out. He's got it CLDA. I'm really far behind. It's not loading. Is my right? The CLDA. Oh, possible buyout. Yeah, it's not loading for me. Sorry, man. You done? Yeah. What is that? That's the one that 70 plus. You think 70 plus for this one? Maybe. Is this like a leverage ETF? It's interesting. We can kind of look at this. Let's look at this here. Swing high to swing low. It's probably around, yeah. So it's failed here at the 50% retracement, like a lot of things have. Overall resistance is going to be around the 200-day and that 50% retracement. It's holding the 21 right now, but we need that 5 to start crossing above the 8 again to potentially start printing higher there for you done. You done did it. JT, are you using both SMA and EMA? If so, do you see yourself relying on one more than the other? Yeah, so I rely on EMA. The SMA 50-day and 200-day are sometimes on my chart to kind of give me perspective of what other people will be looking at for support and resistance lines. Did anyone get into Spotify? I did not get into Spotify, sadly. Or sorry, Shopify. Aaron, look at KR volume. Wow, I know. But again, you have to remember, this was a huge position for Warren Buffett. So I think, again, with earnings that came out, I'm still holding it. I'm going to be a little more, I had a longer term horizon of 45 to 60 days on this, so I kind of have to be mindful of it, and it hasn't really broken below the 200 days, so I have to be stick to my rules, even though it kind of hurts right now because I'm down money in that, but we'll see. Not all trades are going to make money. David J, I think CMG has a great potential to go upside for a while, and following the earnings, it could be a rocket. Yeah, I love Chipotle. Great food, though. The stock is, yeah. Oh, that's CMD. CMG. Yeah, so I see what you see here as well. So again, that parabolic SAR has really been putting a hinder to its overall rocket fuel and ship, but it has been trading the 34. As you can kind of see, it kind of bounced here at the 34 multiple times as its support. So that is indicating if something does go sour, that 34 is really going to come into the first line of resistance. There is a squeeze in play. The volume here zone is trying to print higher, which is indication for a potential pop higher, potentially trying to break above that well over to that 1087 level potentially. But again, being mindful, this could fire short if the overall market tries to sell off as well. So that 34 is going to be your first line of defense there. Will the stream be uploaded? Of course. Thank you, Aaron. I honestly like the interaction plan during this. Could you check out Beyond? I thought I did that for you, Mark. Did I not do Beyond Meat already? I think I did. I kind of said that it was looking really substantial and it was failing at the 618, which is, yeah. So it's around the 66.95 level, which is the swing high to swing low of the Fibonacci retracements, looking for, this is going to be some really strong overhead resistance. But I do enjoy that it has the 5, 8, 21, 34, and 50, and the 200-day very nicely stacked. Again, being mindful of this is a very strong momentum swing with the volume zone is very strong. So this could continue going higher, just but slowly but surely grinding. Ryan, I accidentally sold a bunch of call credit spreads instead of put. That happens a lot to me. Like, so, what kind of deltas are you buying those or selling those puts or calls at? if you sell it, normally if you give yourself 30 to 45 days on selling those put and credit spreads, it normally works out. I normally look for like a 65 to 70 probability of profit within Tastyworks. That kind of gives you a little number there to kind of show you and break that down. Thanks for the analyst on Etsy. Could you look at BBIO, Bob? BBIO was like a pharmaceutical company. Okay. So I just did the fib retracement here from the swing high to swing low, looking like some resistance here at the 35 level. That's the 618 resistance there. The 200-day has come in for some initial support, but really kind of bouncing off the 38.2 percentile move. So this chart really likes Fibonacci numbers. As you can see here, it's really showing resistance here, kind of holding around the 50 percentile move. We do see the 5 and 8 exponential moving average start crossing through the 21, and the momentum here switch from red to yellow, and it's potentially going higher. We see the volume oscillator printing really strong higher. RSI is trying to curl up as well. This is a potential a swinger higher, potentially with the parabolic SAR has switched as well, looking for prices to try to test around 35 or some overhead resistance, and then in the short term, if it comes back down to around $30 level, there, my friend. What do you think about Tesla's next low line of resistance around 9, 8, 7, or etc.? Tesla, yeah, we're gonna take a looky-loo at Tesla. So I'm not seeing, just looking at the chart, I think even though it got those silly downgrades, I don't see a potential of it going to those levels, because again, I think Goldman Sachs and Morgan Stanley, or what are those big ass banks, were saying that they're downgrading their price targets, not saying, they just think they just want to see more of those, the selling of the Model Ys and the overall slowdown in the economy, things like that. We'll see what happens. I don't know if they're just doing that because of Nikola came out. Who knows? That being said, it's still the 5, 8, 21, 34, 50, and 200 days are very nicely stacked. Is it over elevated? Not really. I think that the volume oscillator down here could kick higher if we get some great news, in particular from battery day. Again, initial short-term support is going to be around the 21. So, like, as you asked, the first line of resistance down below is going to be around 915, and then I'm going to call it at 860, and then potentially around 800, like you mentioned as well, for some downward support. But upward support, we're kind of in unknown territory. But we did do the previous, so the previous high was around 968. So the previous swing high to swing low, we kind of looked at the 1272 extension. So we have that alert at 1135 for a potential price target for it to hit in the short term to intermediate term, meaning the next 2 or 3 months if things go great. Oh, Ryan, thanks, man. Thank you for the $2. I appreciate it. You don't have to do that. I really do appreciate it. Okay, it looks like I just messed up my thing here again. Looks like S. Paul says AVEO. Okay, it looks like a pharmaceutical company. Didn't go too well today, it looks like, for them. So even initially, this looks like just overall downward trend. It looks like it had something for the overall virus or something positive, but it kind of failed or something. Again, I don't know the story behind this, but even though it has had well below, even before the pandemic, a downward trend, and again, looks like this probably only has not too much of a stance in it, because again, yeah, it's just been a overall downward trend. Not really much to add to it. Very significant levels again, failed here at the 200-day. We start seeing a lot of the moving average start crossing through the 21. You see the 34 start sloping down. We kind of see the RSI kind of going through, but again, even with whatever news came out here, we kind of want to wait 2 or 3 days to kind of let it cool down and so forth. Cat is in the Dow Jones, that is correct. Uber, we can look at Uber. So Uber kind of had a really nice recovery from all the things that happened, even a really strong quarter, even though they lost more money than ever, but people were so hyped about the Uber Eats. Again, the 5 and 8 has been trading up very well, but again, once the overall market turned, it had a really strong gap down. But this is where I kind of have that 50-day that we talked about that kind of came in here, and it really held the 50-day, had some overhead resistance around the 200-day, now kind of breaking above it. Looks like we potentially can just trade sideways. Again, that 50-day, so around the first level of support is going to be around 3180-ish. We want to see that 5 and 8 start curling above the 21 with that parabolic SAR to switch, unless you are short this. If it could fail here at the 34 to 33.85 level to potentially get flushed down even lower to the 31 or even lower. Jason OXY 2273, tell me, what do you think? Is that Oxa? What's that oil company? You got the 22 level. So with this one, it's really needs to stay above the 21. The moving average is actually nicely stacked, but this is going to be tied to the overall oil as a whole. So this is going to be tied to the economy. Looking for further going into if things are recovering, things are using those resources and things like that. So just be mindful of those movements there. All right, okay, we got a lot of people coming through here. Thanks for sharing your thoughts and all your videos. Can you look at SE? Okay, now it looks like my chat just went crazy. Thank you guys for all joining though. So C Limited, I'm not sure what this does, but holy moly, that is a crazy looking chart there. With this one, since it hit an all-time high today, it's kind of an uncharted territory again. You see that the 21's not really in existence here. It's basically a very high momentum stock between the 5 and 8 exponential moving average, and it's been trading on that lines for quite some time. So just be mindful once this this honeymoon ends that we could see the break of the 5 and 8 again. I am not sure what this company does. We'll see what happens on with this. This is really interesting though. It's a really strong chart though, because it had like nothing and now it has something. So there is this something to do with the virus, the pandemic? Do they do something here? Yeah, it's a very interesting chart though. Let's see here. Did I miss? I know I missed something. I'm sorry guys. Oh, it just pulled me again. Let's see here. Mike says CRWD. CrowdStrike. I know CrowdStrike. This is interesting. I like this. Looking like it has some resistance there. I want to look on. This is a newer stock too. Yeah, I remember this company coming out. It's kind of made a really nice recovery due to a lot of people just staying at home and people needing to be protected by more of like a VPN kind of scenario. If I remember what this company does, they do like network security as well, if I remember right. Again, yeah, it looks like it's kind of breaking out here. Again, it hit an all-time high just recently. Like the other one we just looked at, the 5 and 8 has been very strong. We do see that it kind of did test around the 34 just for a day, but it kind of came back really strong. So between the 91 to 85, I know that's a large range, but that could be onward, downward support. The chart's not the most prettiest before the pandemic, but since the pandemic, making a V-shaped bottom with 100% there, and just been trading above the 21.34 for potential kicking higher. Nothing indicating for this to kind of this merry-go-round to stop playing, but once we start seeing the higher readings in RSI, we could start slowing down there. Oh, Alan, thank you for the $2. Thanks for that help. And what do you think about DLATH? So initially, just looking at the chart, it's just kind of a downward pressure. I don't normally no more downward trend. Not sure what this does. Never heard of it. Looking some overhead, really strong resistance here, and overhead pressure around the 200-day, so it's around the $8 level. But that being said, we're kind of trading sideways, potentially lower with the volume. The TTM squeeze going lower with the momentum. The volume has been dying off as well. Potentially first level support has been around 655. If that can hold, potentially get a little bounce there, potentially a dead cat bounce to potentially go higher. That being said, just be mindful of, again, this has been before the pandemic, this has been kind of a downward trend. Let me look at a longer time frame. Yeah, it's kind of been literally a downward trend. Again, not familiar with what the company does, but yeah. Is this this looks like a tanker stock. Is this a tanker stock? This looks like a tanker stock. This looks like NAT. And normally those tanker stocks are just for trading, so just be mindful of this, that if it doesn't hold a 21, it could be going substantially lower. That's what I would indicate. Oh, it trades directly with oil. I don't trade many oil stocks. Oh, SE is like the online commercial. Oh, Alan. Okay, so it is like a NAT or a transportation company. Let's see here. Thank you for the answers, my chart messages. I appreciate talking to us, the small guys. Small. Hey, David, I'm with you. I'm the small guy. I'm not a hedge fund dude here. Dyslexic investor, what do you think about the picking up forward calls for the new F-150 and Bronco reveals next week? Oh, are they doing that? I didn't even know that. Normally, if it's something like news driven, be careful with that, because that could be already priced in if that's already public knowledge. Because market makers will indicate that they add that to the overall potential movement in the option, so that's kind of somewhat priced in if it's common knowledge already. But we can't price in the reaction to it. So I didn't even know they're redoing the Bronco. That'd be sick. I would like to see that. So with Ford, it had a really nice recovery again from its lows of like $3. It had a squeeze set up here, really fired very strong, very powerful squeeze, and now it's kind of been trading around the 21. We do want to see the 5 and 8 exponential moving average to kind of stop moving down because it's getting kind of close to the 21. We just don't want to see this cross through the 21. So first level support, I'm going to call around $6. Overhead resistance around $7. For an overall swing at this one, potentially for a trade, if you're doing it very short term, very tight, keep it around like $6 to $6.25. If it starts breaking below that, around the $5.80, potentially for a try to have a test higher to around $7. There, my friend. Can you do docu? Yes, we can do docu. Docu. Yeah, this is one that's I regret selling, my friend. So I sold this probably on this peak up here, I believe. I bought this in on this squeeze indication here. We bought it, got around 75, 74. rolled it up to 90. We're like, okay, thank you very much. And then this kind of just went down. And we're like, whew, we really dodged that one, boys. I always talk to myself, I'm sorry. And then it just went skyrocketed. Again, I thought people knew more about DocuSign, but I guess no one did. And it's just been completely like a, lack of better words, a Zoom meeting. It's basically in everyone's vocabulary now of being able to, you can still jump on Docu. It will go up, I believe. I think so too, but I don't like to buy things, even though I do buy things at all-time highs. It's just something, it's in my, I kind of need to wait for a pullback. I don't know if I'm ever going to get it, but I have to follow my rules because I don't want to, it's my money, I got to be careful with it. Oh, Duluth Trading Company, so it's not an NAT. Okay, my bad. So they sell, okay, I didn't know what they sold. Okay, so they sell clothes or jeans. Or jeans in style now? I just wear normal jeans. I don't know they come in a box for me. Mark FireEye. Whew, FireEye. I like those. They're smart. They're super smart guys over there. This thing was a stock that I invested pretty heavily in. So if you go out Wave when it first came out, so when this all security stuff kind of came out, we bought it on IPO, wrote it up, and now it's just kind of been really trading sideways. They do have a really good secret sauce, and it does very well, but it just kind of has so many other competitors out there. Like, I don't think many IT professionals know which one to compare about. They just kind of know what other people talk about and what they compare themselves to. That being said, looking here on the daily side, it's kind of failed here at the 200-day. We do see the 5 and 8 start curling over. The 21's trying to hold here, but potentially it could come back down to the $12 level for potential hold for like level 1 support. But again, we start seeing the 5 and 8 crossing through the 21. We could be seeing going to the 50. We just really want to see this hold, potentially kind of hold the 21, start seeing the 5 and 8 potentially curl higher to try to test that 13 plus level. Jamie, hey, thank you, my friend. $5, appreciate it. Keep it up. You got it, my friend. Okay, what time is it? It's getting late, isn't it? What time is it? 10:30. Holy moly, guacamole. We can do a couple more here. JT Win. Yeah, we can look at some Win. So Win. That's a casino stock. Kind of again failing here at the 200-day. Kind of coming. So this one is more going to be tied to the 34 exponential moving average. You can kind of see it kind of bounced here, bounced there, and kind of holding here pattern. We just want to be very careful here. We start seeing the 5 and 8, especially the 8 crossing through the 21. We could be seeing some potential short-term downside in the trend. We do see also the volume zone kind of heading towards the first red line, which could be more of an indication of some more selling coming in and some weak hands that are just trying to get out of that position. Adam TER. What is TER? Is that Trex decking? Wow. I don't even know what this company does, but that looks really good. It had a really nice squeeze, popped off really high. Looks like a potentially, again, the 21 has it's been choppy in here, but that being said, the 21 has been some ongoing support. Potential overhead resistance around the 81 level. If we break above the 81 and you see some more awesome volume coming in here and some more strength, we could potentially test the 92 would be initial price target going from there. Aaron, I do believe you. I think Docu is just a really great company. and it's honestly could be something could be acquired by like something like an Adobe. Like I don't know why Adobe or Microsoft hasn't bought that stuff yet, for sure. Let's see here. Let me make sure I'm missing. Are you serious? They're doing the Bronco release on the anniversary of OJ's Bronco chase in LA. Oh, that is, well, that's what made the Bronco popular, right? David J, do you mind looking at some of my long-term calls? Yeah, we can look at, let's look at Microsoft, the first one, and then we look at Spot. MSFT. So Microsoft was, we played a squeeze in that a couple weeks ago. So yeah, so we played this squeeze here, kind of a popped higher, got out of it, very short-term trade again, just sold some puts at around these levels and got out at making bloody 80% of your money back on that one for sure. Nice little trade. Then kind of came back, really holding the 21 and 34, potentially trying to do like a cup and handle or like a bounce play here to look to kind of break above 200, because $200 level is going to be a very psychological level for a lot of people, so that once it kind of tap around that $200 level, but once it gets above that $200 level, we could get some really some higher prices coming from Microsoft. You can kind of see here with the volume zone here is really printing at a very high level, but the RSI is nowhere near at the 80 or overbought symbol as well. Again, the moving averages are nicely stacked, the 5, 8, 21, 34, 15, 200, so really nice pattern there. Let's look at Spot. So this is the, oh my gosh. What happened? What do they do today? They buy more Joe Rogan podcast? My gosh. They buy a network? What did Spotify do today? What did the hell they do? No. Spotify shares jumped 30% after landing podcast deals with Kim Kardashian. Oh no. I guess that's people like to watch that stuff. Jeez Louise, that's God bless them. Well, it's ever since it's made an all-time high today, there's nothing really much I can look at here. Again, with such a high volume in this, we can kind of see two things basically happen. We can kind of see it trading sideways, or actually three things. Trading sideways, going higher or going lower. Potentially just trading sideways, we kind of see these pop-offs as normal. But since this is at an all-time high, we could kind of see a small retracement back, potentially testing this fill here and kind of waiting for the moving averages to kind of catch up to see what happens. But yeah, on an all-time high, it's very hard to look at there, Rainbow. Uh-oh, my chat just went blank. Uh-oh. The Kim Kardashian podcast, yeah. Yeah, that's crazy. Like how much, I don't even know how much they want to pay for that. Like how many people want to be like, okay, you know what? I have to use Spotify now because of Kim. I don't even know, like, if there was a lineup, I couldn't choose any of them, put a name to any of them, so that's what I do. Jake, you're also 32? Nice. 32 is a great age to be alive, my friend. Her podcast is about crime justice. Really? Okay, well, is she a lawyer? I know her dad, whoever was the lawyer for OJ. It's kind of funny that they just got a huge deal. They're tied to OJ, and then you have the Bronco coming out. It's kind of like a full circle. WM, Waste Management. Yes, that is one, Ryan, I've been holding. This is one of my favorite boomer stocks, as a lot of people say. This thing has I've been holding this for years, man. This is a great little dividend. I just don't even look at it. I did buy in some around the $100 level here, playing this squeeze here. I bought in some stock for long term, then I sold some short term puts, short term meaning 30 to 45 days. Had a huge pop up, kind of had a little issues around the 200-day, broke past it. Now kind of coming back to somewhat earth, looking for this 5 and 8 exponential moving average to kind of trade sideways. We don't want to cross through this, but potentially we can go down back to the 103, even down to the 101 level potentially. But again, these are just be buying opportunities for me as well. Oh, she's in law school? Holy moly guacamole. I'm missing out, alright. If you get Kanye on there. Oh. Guys, I think I'm going to call it a night here, boys. This has been a wonderful live stream again. I want to thank anyone who donated. That is Jamie, Alan, Ryan, as always. Thank you guys. And also Roberts, thank you so much for tuning in, guys. Hopefully you guys learned something today. If you have any comments or questions, we can just go ahead and just join the Discord. I'm normally pretty slow to get to those sometimes, honestly, especially during the normal business hours that I work. But yeah. And then, of course, if you want to help support the channel directly, just join the Patreon page. I'll do a couple more tickers here if you guys want to do this. We can call it a night. Again, we're going to be having another live stream on Sunday, the traditional 9 o'clock one. I do enjoy doing these during the week as well, to kind of get people who are not able to come, the ones on the weekends and things like that, to kind of give a better understanding. And hopefully the first 30 minutes you guys understood some of the charting patterns and how I use my technical analysis to do so. Again, guys, yeah, we're going to call it a night here, guys. Thank you so much. Ryan, SPY 420. Yeah, of course, it'll hit 420 one day for sure, but we just don't know when, right? Starts buying those long-term puts. Oh, Kelly D, we can do some, my bad. I think you did, we can do some DraftKings. So DraftKings, which we kind of talked about again, that 21 really has come in for support here, since there's not that much price action available because it's a newer IPO. The 21 is really keen here, so it's been trading very well here between the 5 and 8 exponential moving average the last 3 days. The parabolic SAR has just switched, so this could be poised for potential push higher to that $45 levels or higher. But again, short-term support around $36, $37. Let's PFE. Is that Pfizer? Yeah, that's just not looking too shabby. This is just, yeah, because the 5 and 8 have crossed through. It failed through the 34. It's failed through the 50. It's kind of just falling here. I kind of want to pull up on this chart, yeah. So short-term support's going to be around 32, potentially some more support around 31, and then that's a tough one. On the short side, it's kind of somewhat building a base around the RSI here. It's kind of flat. The volume oscillator could be printing lower again, so it could be another push lower, but we're seeing the 5 and 8 kind of not really curling to start creating a straight line. They're still kind of pointing to the ground, so just be mindful of that. So something that I don't really want to get into this one unless you're going short, so potentially you can kind of start trading sideways and so forth. Oh, they do? Well, yeah, so I hopefully they do have some positive testing coming from that. I would love to see that. Amazon, we can look at Amazon. Yeah, Amazon is just, Amazon doesn't care about the overall market. Again, trading between that 5 and 8 exponential moving average, that 21 has been some support here on the way up. You kind of see it here and here. This would be a really interesting one. I read a lot about this one where people are saying that this could be $5,000 in 2 or 3 years, which I always are hesitant when people say things like that. but again, it's Amazon. They literally own everything. It's a really strong company. Just be mindful of, again, if it starts breaking down, the 5 and 8 are the initial short-term aggressive support, then the 21. But again, it looks very poised for continuously grind higher. Ghost FX. So thoughts on Microsoft was we could potentially see some resistance at 200 because it normally doesn't go through 200 right away, which is like a psychological strong number. But everything is indicating for a slowly grind higher to Microsoft as well. But again, anything could change at the market. Things can go sour, and it would Microsoft would go with the rest of the crowd and slowly trade lower. But again, the 34 and 21 exponential moving averages have been some levels of support on the way down. So we're looking at 188 and 185 levels for support on the way down. Guys, on that note, I have to get going, guys. Thank you so much for everything. Again, anyone for joining. Again, I'll be putting this recording to be able to be viewed by anyone. Usually takes a couple hours to render from the YouTubes. Again, guys, thank you so much. Have a wonderful evening, and we'll be talking soon. Peace.